Okay, so this is the F35 strategy. Basically, the initial payout looks like a fighter plane, so that's why I thought of calling it F35. So on at 9:20 on Thursday morning, we take the trades for the next week, and what we do is basically we take two butterflies, one call and one put, which have directional skew to them. How do we take skew in the direction? We just space the strikes accordingly. For example, if you see this is the bearish trade. So in bearish trade, we have taken 18,050 is the future price. So we take one strike above in the money, sorry, outside the money, which is 18,000. And then this is four strikes above. We take 17,800, sell legs, four lots, and 70, and then two strikes above. So the difference between this and this is four strikes, and this is two strikes. That's how we generate the skew. What that payout will look like, it's approximately like this. So this is how the payout generally looks like. All right. Now the same way we will mirror the bullish trade as well. With 18,050, so one strike below 18,100, CE will be bought, two lots. So see here, from here, four strike difference, from here and here, two strike difference. So generally I've just assumed these prices. These are of we will see how during the backtesting what the values usually vary from, but generally the debit. So okay, so we'll go to the debit part. Now debit is, this is a debit strategy. That means we are giving some money while executing this strategy. What that means is the money that we receive upon selling the four lots will not be enough to cater to the buy lots. The buy lots obviously are more in value, therefore there will be a debit. Now this debit is important for adjustments in the future. So what happens? We have taken this trade, right, and we have mirrored this trade on the bullish side as well. Now the highest premium one, that is the one nearer to uh, the money strikes, this value has to be monitored in both the bullish and bearish trades. The moment this reaches either 1.7x of this value or debit of this particular leg of the trade, then we do adjustments. In case it reaches the debit, that means the market has gone bullish, the bearish trade is making loss. So when this reaches the debit value, what we do, we exit the buy legs, these two buy legs, and we run the sell legs as it is, right? Sell legs would be making profit, p sell would be making profit in a bullish trade, and when, and this also would reach, may or may not reach the 1.7x value. If it reaches after this has gone debit, then you will have to be very careful once a debit is reached, either in this or this. So if a debit is reached, the next trade, the opposite trade, what you do, you multiply this by 1.5 times the debit. So if, let's say, here the debit was 55 points, you will multiply this by 1.5 times to reach 83, right? So either it reaches 83 or it reaches 1.7x, whichever comes first. If it reaches, unfortunately, 83, we square off everything and close the terminal. That's the end of the trade. Whatever losses, bare minimum, we take and we leave. However, if this reaches 1.7x, then what do? We then roll down the CE. That is, we book the CE and we roll down. If you see there is a difference of four strikes here, we roll down two strikes, and then we continue the trade till the end of expiry. This is the simple adjustment. So again, what we do, the highest premium ones, we calculate the 1.7x, and we calculate the net debit in the trade. Whichever reaches first, if let us say this reaches the 1.7x first, then we roll down this, right? And usually the other trade would reach the debit by this time. So first, the usual adjustment is the debit part. Whichever whichever part, bullish or bearish, reaches the debit, you square off the buy legs and you keep the sell legs running. But then, fingers crossed, you expect the opposite side to reach to not reach debit. Even if it reaches debit, even if there is a gap up, gap down on the next day, still the losses will not exceed 2% of the traded capital. All right. So generally, it does not reach. That is my I don't know. That is my feeling. We'll have to backtest this strategy to make sure that this is the way it is. Now we'll go to the simulator and try out in the month of February. Let us say we try out 3 weeks, right? So let's take 2nd Feb to 9th Feb. Sorry, yeah, 2nd Feb to 9th Feb. Expiry will be 9th Feb, 9:20. So we take what do we do? We look at the future price, which is 17,554. That means 17,550. So we take 17,500 strikes onwards, right? We take 17,500 by 2 lots. 1, 2, 3, 4. Sell 4 lots. 1, 2 by 2 lots. So this is our bearish trade. So see, as you see, 17,500, 4 strikes above 17,300, 2 strikes above 17,200. This is our bearish trade. Similarly, the bullish trade would be from 17,600 onwards. 17,600 by 2 lots. 1, 2, 3, 4. Sell 4 lots. 17,900 by 2 lots. Okay, so this is your F35. It looks like the vertical stabilizers and the cockpit and the wings. So it looks like an F35. Just to be slightly different. Now, this is the payout. Now, what we need to do is we need to get to these strike prices. This is the price we entered in. Let's go to our Excel sheet. Sorry. Let's go to our Excel sheet. So this is 2nd Feb to 9th Feb expiry. We have calculated the net debit for the bearish trade. So if you look at the prices, 193.05. Buy legs are 89.35. So this is the buy price, the total debit, and the total credit. Sell price is 116.15. So therefore, this is your total debit per lot, right? So that will be around 50. So I've done this exercise generally for various weeks. Generally, the debit usually works out to be around 50. All right. So what we do, we take the future price as 18,000. Sorry, 17,550. So we take one below, one above, and then 4 strikes above, then 2 strikes above that. These are the prices. Adjustments would be at 1.7x times this price, or when it reaches debit. Similarly, in the bullish trade, we have taken 151.6. See, 151.6 buy leg 56.55, 56.55 buy leg, sell leg is 80.4, 80.4. So this is your net debit, and this is 1.5 times debit. So if one of the legs reaches debit, then let's say this reaches the debit of 50, this strike reaches the debit of 50, then we will be on the lookout for this strike to reach this. If this strike also reaches this debit, then bad luck, we exit with loss. Now let's look at how we make the adjustments. So here we are at 193, this is at 151, so we will be on the lookout for 257, 328. Let's move 30 minutes. Look at this value and this value always, so it should be either 50 or 328 or 40 or around 50 or 257. So 257 and 328. This is reaching your threshold of 50. Let's go slowly now. Okay, did not reach. So now let's assume, okay, in the next 5 minutes, okay, it doesn't reach. Okay, that come below 50. Okay, so it has come below 50. So what do? So we book this at whatever price, 7, whatever position, right? This has reached the threshold. Meanwhile, this has not reached even 257. So we modify this position, we square off all the buy legs, we keep the sell legs as it is. So this sell leg is running, all right, and now the payoff looks like this. So this is how the payoff looks like. Okay, we have exited the bearish trade because the market has gone bullish. Now we are waiting for this to reach how much? 257 or 260 thereabouts. Does it go? Or yeah, so let's say this is more nearer, you'll book it here. All right, so this one we book at 254.95 position, and what do? We roll down, right? 17600, 17800, there is 17700 in between, so 17700 CE, 17700 CE, we buy 2 lots. So essentially we replaced that lot with 1 lot lower. All right, now once this adjustment is done, look at the payoff. Reset zoom, it's here, it's almost between 1 sigma and 2 sigma, your so your break even is somewhere here, right? So usually it doesn't reach, but if you have a bad luck, it might. So what do? From here on, there is no further adjustments. The only thing to exit in panic would be minus 5,000 profit, minus 5,000 loss. If not, we simply take it to expiry. This is 3rd Feb. Our adjustments are done till 9th Feb. Nothing else to be done. It just goes on. So we are on 8th, 9th Feb, 1425. So I would suggest exiting at exiting at 3 o'clock. So 55 4850. This is your profit. All right, so this is 4850. At any point in time, if you are getting 5,000 profit, I think so you should square off. And at any point in time, if you get 5,000 loss, I think you should square off. So that's how we have carried out this particular trade. Now let's go for the next month, next week, that is 9th Feb to 16th Feb expiry. This is where we encountered both the SL to be hit. 16 expiry, so 16 Feb expiry. reset, we take 920. So price of future is at 17,672, which is essentially 17,900. So 17,900 means 17,850 is where we start. 17,850 by 2 lots. 1, 2, 3, 4. Sell 4 lots. 1, 2, buy 2 lots. So this is our bearish trade. All right. So 17,950 onwards, our bullish trade. Buy 2 lots. 1, 2, 3, 4. Sell 4 lots. And buy 2 lots. Is it correct? Yeah. So this is like the same payout diagram. Now observe the same amounts I have carried over to this Excel sheet. So you see 123.85, 53.3, 34.5. So these two are the buy legs. Total value is this. Sell price, this is the credit that you take. Net debit is 51. All right. Same thing here. So 123.85, 1.7x is 210. Same thing we have put for the bullish trade as well. And 1.7x is 129, and here it is 210. Net debit here is quite less, 42, and 1.5 times the net debit is 63. And let's see the adjustment. So how do we? This is how it is. And your PNL 123, and this is 76. This is very low premiums. Okay, and this is bound to happen if you take this trade. So here it is 42.3, and here it is how much? 51.75. So let's see. We are observing this and this. This is reaching 50. We have 42. Okay. Okay. Just escaped. Going 5 minutes just to see whether it goes down. Okay, now it's going down. No. Because this is nearing 47. Sorry, 40. Narrow escape. Okay, so here we are. Okay, so here this has reached the debit. All right, so we exit this at 41.6. That is, buy legs are being exited. 11 point. This is 3.65. Now we let this trade to continue, and we are monitoring this price. Now our revised debit is how much? 51.75 was our previous debit. Now our revised debit value would be 77.625 or 78. So if this reaches 78 now, then you have to throw in your towel, call it a day. That's it. So now this is in profit. Okay, but somehow there is not much momentum towards the downside. It's still not having, so it is in profit even now, but it fails to reach your target of 210. It has to reach there. So 130, 127, the profit's dwindling now. Okay, just come back. 800 minus, so we are again now 97. So here the debit is 78 now, right? Okay, yeah. So here we have to exit everything. All right, and our loss is 795. We'll mention it here, 795 minus 795. Now let's go to the next week. We have exited this trade. All right, so reset. We'll go for 16 to 23. All right, now we'll see 16 to 23. We'll go down here, 16 to 23 expiry. All right, this will be 23 Feb. And so the future price is at 18,120, so it is 18,100 rounded to nearest 100. So we take one below, that is 18,050. So we take 18,100, we take one below 18,050, 17,850 and 17,750 strikes. These are the rates at which we are taken, so let's take them. 18,050, 17,850, 18,050 buy lots, 1 2 3 4, sell 4 lots, 1 2 buy 2 lots. This is our bearish trade. Bullish trade would be 18,150 onwards. All right, 18,150 onwards. So 18,150 buy 2 lots, 1 2 3 4, 350 sell 4 lots, and 18,450 buy 2 lots. So we have our F35. Now these are the values which I've put it here. So 80.6, net debit is very less, 36, net debit is 54. All right, so we are looking at 137 and 155, or let's look review when it reaches 50. So this is your values that you're observing. Let's see, 70, 73, 72, 75. Okay, this is 86.9, 71, 72. This is reaching. Okay, both are low, very low. Usually when there is such low premiums, it shoots in one direction. Okay, this is 58. Where are 54 is our debit. 60. Okay, let's say it did not meet. So let's say this is nearer. All right, so we can't help. There is only a 5-minute difference. So we'll book it. So this has become really bearish. 58.25, right, and 5.85. 0.85. Sudden spike in P. So this is highly bearish. We're looking at adjusting this either now at 54 or 137. Okay. Okay, so this is where we adjust this. So what we do, 18050 we book at 137 and we roll it above. So in between this would be 17950. So we take 17950p, 17950p by 2 lots. Okay, so let's look at the payoff chart. Payoff chart is like this. All right, so we just go to the end of the day, 23rd. Where are we? Okay, so 23rd, 1220. Okay, one more day. Now if you look at the value, the profit, it reached around 3000. So you can have a trail as well if you want. uh, if you want, you can have a trail as well. 30 minutes, we'll just go directly to the end of trading. So 15, let's say 15. So this is where ideally I would like to book out 3 o'clock. 2365 is the profit here. So this is in Feb, 23 Feb. Similarly, we've carried out for the next week as well, and the profit was higher, 4385. So as you see, the generally you will end up holding 4 lots of one sell position on one side, and you will hold a call fly. So the the amount of money required for such a strategy would be, let us say this is the bearish trade that you're carrying, right? And if you continue, you just have to add one more bearish, let us say 4 lots, right? This is how the strategy is. And if you look at the margin needed, it's about 4 lakhs, right? So let's say 4.1, 4 lakhs, but by the time these premiums come down, it is around 4 lakhs only approximately. So let us assume that it is 4 lakhs. So for 4 lakhs, generally you get around 1% uh, profit generally. Okay, even if there is a loss, that is less than, you know, 0.5%. Generally, this is what I have observed, but we need to backtest and see.